So over the last few weeks, I've been doing a lot of reflecting. Obviously, with markets slowing down, I've had more time to think about and process the Q4 period last year and also Q1 this year, and really reflect on some of the mistakes that I made and how I can become better as a trader. And some of the realizations that I came to and some of the calculations that I came to actually revealed the extent of some of my mistakes, which left millions of dollars in potential profits on the table. But instead of shying away from it, I thought I would actually come on camera today and speak about these mistakes, because I think it's very, very important to publicly reflect so you can learn on a lot of these things. And I actually think a lot of the mistakes that I made, maybe you made as well. Because they're very common across the crypto markets, no matter how experienced you are. So in today's video, I'm going to be going through the top 10 mistakes, which cost me millions of dollars this cycle, and reflecting on my experience in 2024. I've done a similar video reflecting on 2021. Those mistakes were even worse because I literally round tripped everything. This time I didn't round trip everything. I still managed to make profits, but I could have made a lot more, and there were some killer blows which I wish I could take back now. But as I said, I think the best thing that I can do and the most useful thing that I can do is actually reflect on a lot of these. Let's begin by going back to 2021. This was a cycle for me where I learned a lot. I got into crypto in 2019. I've told this story a couple of times on the channel. Bought a whole Bitcoin at $5,000. Obviously, that ended up doing a 10x. It was worth 50 grand. Then I got really into DeFi during DeFi summer in 2020 and started getting into Ethereum, Ripple at the time, Cardano, eventually Solana when it launched. And I just got really involved in the industry. And then obviously we had the lockdowns in Australia, where I had a lot of time that I wouldn't normally have to really go deep and get obsessed and researched. And throughout that entire period of 2020 and 2021, I just locked into the markets. Long story short, I made a lot of money. I made over 7 figures, and I ended up round tripping most of it back to a few $100K. And I told myself I would never make those mistakes again. Now, fast forward to 2024, I'd pretty much spent the entire bear market, so 2022 and 2023, creating content, still trading every day, still investing every day. And that was a really important period for me where I didn't give up when a lot of people quit. I actually stuck to my guns, and I was investing throughout the entire bear market, made some big buys, which were public during FTX, on Solana, on Ethereum, on a bunch of other alts, and ended up obviously doing quite well from them in 2023. Hit some big trades like Pepe, which was my first 100x, which ended up being realized in 2024 as quite a big trade. And that entire period was really important for me. However, I think over that period, a lot of the pain that I felt from losing a lot of money in 2021 started to dissipate. And you do, over time, start to forget some of the original lessons that you learned in the market. So come the end of 2024, which was Q3 and Q4 last year, although I made money and obviously did a lot better than 2021, I'm in a better position now than I was then, I still made some of the same mistakes again. And I'm going to be going through those mistakes in today's video because I think they can help you a lot. But these mistakes pretty much meant that I didn't make as much as I could have. Now, as I said, I did better than 2021, and I definitely am now in a much stronger position, and I've got more capital that I can use to build up an even bigger portfolio the next time the market runs. However, I'd be lying if I said that it wouldn't be nice to have a few million extra dollars, which was definitely achievable if I was a little bit more level-headed during the crazy bullish period in the market. So let's go through some of the actual mistakes at question here, and kind of reflect on each one. There are some interesting ones that I don't think a lot of creators talk about, which I'll be touching on today. It's not just the standard stuff, oh, I didn't take profits. There are actually some reasons why I didn't, and some nuance, which I think is really, really important to cover that I don't see many people covering. And some weird things that I did that ended up being stuff that actually ended up saving me from round tripping it all completely, which I also want to discuss today. So the number one mistake and lesson that I've learned is it's better to sell too early than too late. Pretty much every single trade this cycle where I had sold too early, I ended up being happy with that decision, even though the price kept going higher, versus the coins where I completely round tripped. So generally speaking in the market, it's better to incrementally take profits on a coin as it goes up, even if that means selling too early rather than round tripping and selling too late. And the reason for this is that most coins in the market end up giving up their gains at some point. So by nature, the game's almost rigged against you in the sense that eventually that coin will go down. So then during the periods where the coin has upwards momentum, that is your period to capitalize and lock profits in. And there are many examples that I could give because this happened probably across 10 coins in my portfolio, but there's one example which I think is a good one where I probably didn't execute as well as I would have liked, and this is on PinLink. I actually called this coin in my Discord at 40 cents. I did a video as well around 60 to 65 cents at the time, and this ended up being a big gainer, around a 10x from my initial call, around an 8 to 9x from my YouTube call. This was absolutely massive. And although I did take profits on the way up and I took out my initials, I didn't make nearly a 10x. Maybe I made a 3x, when I could have at least made a 6 or a 7x if I was just more aggressive with my profit taking on the way up. But I wasn't, and the coin obviously ended up round tripping. Now, fundamentally, this has the potential to come back. It's in a strong narrative. There's a good team building it, but you have to capitalize on momentum no matter what project it is when momentum is there. And going back to the lesson here, selling too early is always better than selling too late. So what I should have done in hindsight is gone a little bit more aggressive earlier and then started to progressively go more defensive rather than being a bit more defensive earlier than going aggressive later once the majority of the gains had already been round tripped on the coin. There's a few, it's actually still above my initial entry somehow. A lot of other coins aren't. So obviously that was a good entry, but you know, it's not really just about the tangible profits or loss on a trade. Opportunity cost is also a major factor in crypto, and you'll notice a common theme across a lot of these lessons. A lot of them do revolve around opportunity cost, aka the gains that you leave on the table, because as an investor and a trader, that's equally as important to consider. Moving on to lesson number 2. This is kind of a weird one, but one that kind of saved me in many ways, and this is taking profits out of crypto entirely. So there were many times where I just took profits into stables, thinking that I was locking in the profits from a position, but really what that was doing was exposing me to the market in the future. Because I have ADHD, I'm a little bit impulsive with some of my decision making. So when I have stables on an exchange, especially like something that's really accessible, if I see a new opportunity, I'm very prone to taking that opportunity. And this works in my favor during bullish times, but if I miss the window and buy in slightly too late, this can really work against me. And I'm sure some of you can relate to that. But the problem is, what I would do is I would take profits on a trade, amazing, put my money into stables, but since it was still on an exchange or still on a MetaMask, which I'm actively using, it was there. So the next time I had a trade idea, there was a big pool of money sitting there, so I would go bigger into the next trade because I had this big pool of money sitting there. What I did do, luckily at one point, was actually cash some money out into other assets, you know, cars, watches, that kind of stuff, and also fiat. I went into traditional banks, and that money I never put back into the market because it's relatively hard to on-ramp. Like once you take, let's say, $1 million out of crypto, getting that $1 million back in is really difficult. You're going to have your bank probably asking questions depending on the country you're in. You're going to have a lot of headaches. You're probably going to pay a lot of fees. That's a deterrent. It's just really hard. So the best thing that I actually did, I didn't even know it at the time, was off-ramping money. And the worst thing I did was keeping too much in crypto, which resulted in me going too big into trades at the end of the cycle. And these trades ended up losing me, you know, more money than I would have liked. So lesson number 2 for all of you is if you make a lot of money in crypto, take that money out or a portion of those profits out and put it into something real. It can literally be a watch. I know watches aren't the greatest investments, but at least they hold their value, you know, if you get a good watch. Even better, put it into fiat, put it into treasury yields, put it into a car, put it into a house. Anything that's not in crypto, by taking it out, it's very hard to put it back in. Something like a house or a car, it's literally impossible or very difficult, and there's a high barrier to entry to selling that and putting money back into crypto unless you loan against it, which is obviously a really stupid thing to do. Never take leverage to invest even more capital in crypto. So next time, we make a lot of money in the market, something I'm going to do is I'm going to use my bank account as my default taking profits account. I'm no longer going to use my MetaMask or my Phantom wallet or any other wallet as my default profit taking account. I'm going to use my bank account. Yes, I pay a little bit of fees to off-ramp, but it stops me from making bad decisions and it locks in those profits, which is very important. You could even buy gold. I think that's also a decent thing to do. Whenever you make money, literally buy gold. You can also buy Bitcoin. Just make sure it's not on an exchange and you put it into a ledger so it's hard to access that Bitcoin. And obviously some of you are going to be, really resolute and have a lot of diligence when it comes to your finances. That's fine. I'm just not one of those people. I'm a little bit more impulsive, which really works in my benefit at times, but it also works in my detriment. So I think a lot of crypto and markets in general and life in general, right, is about understanding yourself. We're all wired differently. We're all prone to making different types of mistakes based on who we are as people. So you have to almost engineer the environment to work for you. So if you're really, really good with your money, if you're a really strict person and you're able to just save money in stables and that's convenient for you, great. For me, it isn't. And it doesn't really work for me because I'm too impulsive. And now that I know that, I can put in barriers. It's just like someone that is prone to binge eating or overeating. I used to be prone to this, when I had food in the house. Just by removing the food out of the house, not keeping anything in my fridge. The people that follow me on Instagram know I just keep water in my fridge. That stops me from overeating because I physically don't have food and there's a barrier or there's friction to getting more food. So habit forming is a lot about understanding who you are as a person and then building an environment that suits your style. And it's the exact same in crypto. You have to do things which actually suit your investing style. All right, moving on to lesson number 3. This is a big one. It might actually be the biggest of this entire video, and that is I was complacent. Now, complacency is a weird one because complacency doesn't mean that you did the black and white wrong thing, but there's a gray area where people will convince themselves that they're doing the right thing even though they're doing part of the wrong thing. What do I mean by that? There were periods in Q4 where I was taking profits. In fact, I was taking profits the whole cycle, right? So my number one lesson from 2021, 2022 was I didn't take enough profits. This cycle, I was taking profits a lot. However, just because I was actively taking profits a lot didn't mean that I was taking enough profits. And I would tell myself, Mars, you're doing great. You're taking profits. Look at you. You took another 100K. Then I would take another 100K, then another 100K. Oh, amazing. Look, you're taking profits. You're smashing it. But then the next week I'd reinvest into something else for 300. So then that 300 that I took, is already gone. Part of the problem, lesson number 2 that I talked about before about actually off-ramping. Or there'd be a position which was $1 million and I took 200K profits and I would tell myself, I'm taking profits, but there's still 800K exposed to that position. So this is where the word complacency comes in. I was a bit complacent. I didn't feel the urgency to take enough profits. I felt like things would go on for a little bit longer. So even though I was taking profits, I was a bit relaxed about it. 100K here, 100K there. But I should have been like, no, you need to get 70 to 80% out as fast as possible. Here's the plan. Here's how I'm executing that take profit plan. And here's how I'm executing my invalidation plan. And although I did that on some coins, for example, I was much better on LMT, right? I did a pretty good job at taking some pretty nice multiples on that. At one point, I think that was up around a 7 or an 8x. That was a great trade. I did well on that. But there were coins like Lucky, to state the obvious, where I did absolutely terribly on that trade. And I was very, very complacent in terms of not taking profits. Remember that the word complacency doesn't just mean not taking profits, right? Ignoring warning signs is complacency. This is where I really stuffed up on Luna. I was very complacent with Luna. Not taking profits, of course, is the other one. Acting slow on new information is complacency. If there's new information that comes out about a founder of a protocol or something fundamental in the market and you don't act, that is complacency. Bad planning is also complacency. It's comfortability. It's not having the urge to act. Notice when the market drops, you probably have the urge to act really quick. Oh, I got to protect money. When the market pumps, you have the urge to buy in. Oh, I have to make money. But you shouldn't be waiting on the market to make you not complacent. You should always be acting. And that's a little bit of a trap that I personally fell into. So just make sure that you don't ignore warning signs, you don't act slow, and that you actually act quickly, especially when it comes to preserving capital. And there are obviously a lot more tools now in the market which can help you actually forcing yourself to take profits. It could be as simple as setting limit orders on exchanges or with memes Hey Anon, this is a good example of it. You can actually set up like automated bots which can take profits for you. So Daniela yesterday announced a new feature that's coming out for Hey Anon, which basically has these average true ranges which measure volatility, and you're able to set your take profit strategy based on market volatility. So you can have like a rolling stop loss essentially to protect your position. A trailing stop loss. So you can see here the calculations for a trailing stop and the multipliers associated with it, which basically ensure that, let's say when you enter a coin at let's say 1 cent, if it goes to 2 cents, you're actually taking profits. And when it goes up at 2x, you're taking profits again. When it goes up at 3x, you're taking profits again. And then when price starts to go back down, you have automatic invalidations because you have a trailing stop. So there are a lot of new features. I thought this was a good example on Hey Anon that are now coming out, which actually help you to do this. But I probably wasn't doing enough of it, especially with the new coins. So on memes going forward, I'm going to be experimenting a lot more with these strategies. So like ATR, automated trailing stops, automated TPs. I'm going to be making a lot more content on the future on automation because I think for a lot of you and even me, that is really one big solution here. It's using all these tools that we now have, all this AI tooling to actually ensure that, okay, if you're emotionally not able to TP, if you're emotionally not able to invalidate, have a system which invalidates for you or take profits for you, because that would have actually solved me a lot of issues. Taking a trade, like the pin link trade, for example, and then setting in my parameters. Every time at 2x's, I want to take X%. If the ATR hits a certain level, then I want to have my stop loss here for X%. And that would have, I think, really helped during that period. All right, moving on to lesson number 4. Treat every dollar with respect. This is a big one for me. I felt like at times in Q4, I just didn't value money. Because I was making so much on trades and I had some monster positions, multi-million-dollar positions that I'd never really been managing that much money before, I kind of got very flippant with money. Oh yeah, I'll invest 100K in this. Oh yeah, I'll only TP 200. Oh yeah, I'm making so much money, it doesn't really matter. I don't care if I lose this much. Like I just started to become so detached. And then the second the market turns, now for me 100K is valuable again. Like I don't know, it's not really good to say, but I'm just being honest in this video. In Q4, like I didn't really care about 100K. Oh, 100K, 100 shmei. Now, like I'd love 100K. That's very valuable. You have a lot more leverage now with that 100K because prices are a lot lower. So, and the same goes for any denomination. 500K, $1 million. I just didn't value any of it as much, really. Like, there were trades where I lost. I already did a video on this, but like lucky, $1.7 million unrealized. Now, of course, the actual amount that I could have gotten out for the reasons explained in that video was probably a lot less, maybe 6, 7, 800K. But that's still a lot of money. 7, 800K, that would be really, really valuable for me now. But at the time, I just didn't really seem to care. So what I wasn't doing was treating every dollar with respect. And it's funny that even after, 5 years in the space, now my 6th year in the space, we still make these mistakes. Now, the mistakes maybe are less heightened than the early days. Like in 2021, I pretty much blew myself up. This time, I have a much better base, but they're still the same mistakes. They just evolve over time and they change. As you make more money, your traits actually get amplified. So you need to do more to actually make sure that you're keeping them at bay. Loopify had a great tweet which really hit home. I was reflecting on this a lot last week when this was released. They said, people genuinely don't understand how valuable $1 million liquid is. It takes a long time to earn it, even with a successful career. You can be in the top of your career field, make 400K a year, and take up to 5 years to save $1 million. You can earn 200K a year, and it'll take roughly 10 years to save $1 million. And this hit home because there were times, as I mentioned, where I treated $1 million even quite flippantly, like had lost $1 million and didn't really care. And now I would care a lot more about that amount. An extra $1 million liquid in my account could go a lot further, especially in a market like this where the business is making less money, when my trades are making less money. I still want to scale. I'm building some other businesses right now, which maybe I'll talk about later, probably on my other channel. And now $1 million, it's not the same as it was in Q4. I'm now thinking, okay, $1 million can hire a team of 50 people and scale a big business and do research and development on a product that I'm building, and I can spend $250,000 on that, hiring some great developers, pay a dev 100K a year to be full-time. Like, that's where my head's at now. And that's why I value the $1 million a lot more. But at the time, I wasn't thinking of that. I was just thinking, oh, no, it's fine. I'll just make that on another trade. So I think this is a very important lesson. Treat every dollar with respect. Now, I'm using examples which are relative to me, but it could be the exact same logic with $100 for you. Like everything is relative. It could be $1,000 for you, whatever amount it is. It's the exact same principle. High likelihood if you lost money this cycle so far, you didn't treat every dollar with respect. And I know at times I didn't. Lesson number 5, compound slowly. This kind of attaches on from point number 4. And that's basically like, look, you don't need to hit these big trades. You don't need to hit a big Hail Mary, 10, 20x play to make a lot of money in crypto. Just make it 50%. Go in, make 50% go out. Go in, make a 2x go out. Now you have a slightly bigger base. The next trade you take, you can go in with a little bit more size, make money go out. And you can just build your stack up incrementally like, a poker player would, like a traditional business would, instead of trying to go for these big Hail Mary targets. So I think by trying to make money a little more slowly, ironically, you'll end up making money a lot quicker. Because by trying to make money fast, you can blow up quick. Whereas by trying to make money slow, you actually make sure that you're preserving capital. And ultimately in crypto, preserving capital is the most important thing. It's more important than making money. So try and make money slow and you'll make money fast. I know it sounds counterintuitive, but it's literally been the case for me. Point number 6 also follows on from that point. F price targets or profit targets. It's so dumb. It's so dumb. This also happened to me on a few coins where I was like, okay, I'm going to make $10 million of this trade, or I'm going to make $1 million of this trade. And unless it went close to that number, I just didn't even care. I was happy to round trip Lucky, for example, from 1.7 back down to 0, just because I was trying to chase 10 mil. It's this completely arbitrary number, which means nothing, but I genuinely thought that I could do that. And there were other coins as well, smaller examples where I had a 200K position, I wanted to make $1 million. And it would go to 700K, I'd be like, nah, I want to make $1 million. The market doesn't care about my price targets. The market doesn't care that my price target is $1 million. The market doesn't care. It doesn't know. It acts independently. So you really shouldn't have a system based on arbitrary profit-taking targets. You should have a system based on incremental or percentage-based targets. And the other thing is when you do hit your goal, because there were times where I would hit my goal on a trade. Let's say, I put 100K into a trade. My goal was 500K. I have 500K. What I would do is I would often move the goalpost. Oh, now it's $1 million. So I would just up the goalpost. Whereas in reality, you should realize the first trade, and then the new trade that you're taking from 500K to $1 million, that's a new independent separate trade. So you should reevaluate your trade. You shouldn't just move the goalpost for an existing trade. I think that's very, very important. Or realize your trade and get back in on separate parameters instead of just moving the goalpost up, because that's a big problem. I'm sure a lot of you experience that. Maybe you put 10K into crypto and made 50K, and then you're like, nah, I'll stop at 100. Well, you've just moved the goalpost. At least realize half of the 50 and then go again with 25 to try and make 100, instead of risking it all and going back down to 0. Point number 7, always set invalidations. This is a clear one. I won't harp on about it too much because we've spoken about it a lot on the channel, but it is one of the clearest lessons. And although I did it during many times this cycle, there were still times where I didn't do it, and it would have really helped me out. I'll use EMP as an example of a project where I kind of did it. I probably didn't do it to the fullest extent, but I just think it's a great chart to actually show this example. There are also many other charts. So this is another token where I think I first started mentioning it at like $40 or $50, potentially 70 or 80 as well. I've forgotten the exact point, but I know it was below this breakout line. It ended up doing massive multiples, running up roughly a 6x, going to $400. But momentum started to stall. As you know in my video yesterday, something I look for on charts are local lows, and I look what happens to price in terms of reacting to those lows. So in an uptrend, what will happen is you'll make higher lows and higher highs, as EMP was. But then what happened is we made our first lower low at $350, and this was the end of the uptrend. Now we're in a downtrend. Now, a really smart investor, they'd actually probably cut everything here, or at least 50% here, because look, worst case, it chops around here, and then you just get back in on the reclaim of that level, right? Fine. Then you're not risking your money to the downside. But what I did on this coin, although I did take some profits on the way up, I got at least my initials out. I also made some extra profits on realizing them on a de-risk around this level. I didn't take enough. So what happened is, price obviously kept moving down, and because I hadn't taken enough, now I felt bad de-risking even lower, and I didn't invalidate as much as I should have. Whereas there were some really key signs. This was the first clear level. Then you had your bearish retest of the money noodle even later, and this, pinged off multiple times, many chances to de-risk on the bounce, and you have structure breaks. Structure break on this line, this line, this line, and this line, and this coin actually adheres to structure really, really well. The TA on this was great, and I showed this chart, many times, so I think some of you probably would have done a better job invalidating than me. In fact, it's kind of funny, on the Discord, I'd posted a lot of charts and spoken about some great invalidation levels that even I myself didn't stick to. So I had users messaging me saying, oh, Mars, I invalidated at this level, and that was my level, and I didn't invalidate. So I think the lesson is, if you have a damn invalidation, just stick to it. Don't be emotional. Just set it before you even trade, and then when the time comes to do it, make sure you execute on it. If you don't know how to set invalidations, if you don't know how to read support and resistance, if you don't know how to use moving indicators, in the Mars High Club, we have an entire exercise database dedicated to teaching you how to read RSIs, how to make spaghetti charts, how to spot relative strength, how to get low time frame entries, where our analyst Paradise, who's our head low time frame trader, as well as Morin, who's another one of our expert traders, they're doing tutorial sessions. So basically, there are these individual topics in the forums. They'll teach the lesson, they'll do a video, and then you, as a user, can test against these experts whether you understand the system. And they will review your charts, let you know if they're good, and tweak them to give you even more feedback. So we actually have active mentorship from expert traders in the group. So if you are serious about learning about how to execute, so next time the market runs, you'll be a lot better of a trader. You can join the Mars High Club. There's always a link in the description below if you want to be a part of the community. And this is the new Traders Hub, which we've just rolled out, which is absolutely amazing. Paradise is also doing the same for his resources list. He's got all his indicators, all the journals and trade trackers, templates, everything you need to be an expert trader. And you can actually test your skill in the Trading Talk channel, where people are basically just hanging out all day and trading. And we have all the analysts in there commenting, giving feedback on entries, exits, etc. Obviously, they also post their own setups. Paradise, as you can see, posts all his trade ideas, chart ideas, everything at all times. And this has probably been the best thing to come out of this slow market, although it is a bit of a boring market. To see the growth of the Traders Hub and everyone really serious and committed to getting better and learning how to trade, that's been an amazing part of this period in the Mars High Club. So I hope to see a lot more of you, even if you're already in the group, actually getting a part of the Traders Hub, learning, putting your skills to the test with our traders, and actually taking trades and learning in this market. Even if you're doing it with tiny size, just to learn and prepare for when the market comes back, that is probably the best thing that you can do right now. Even if you're not trading big amounts, all you want to do right now is absorb information and learn, so that next time there's a big run in the market, and we always know there is a next time at some point, whenever it is, you'll be much better prepared to capitalize. Let's quickly run through the last 3 points. All important. None of these points are unimportant. 8, don't borrow conviction. Whenever I've bought a coin based on someone else's thesis, it's ended badly. This happened a few times where someone would message me on Telegram, oh, Mars, buy this coin. And because I respected them, I would buy the coin, and it would make money often at some point. But then I just had no gauge on the trade. Is it still a good trade? Should I now exit? And you guys probably also experienced this with creators on YouTube, maybe even my channel, where you entered a trade because someone was speaking about a coin, and you entered it and it was good for a little bit and you might have made money, but then when price started to drop, you were confused whether you still had conviction, whether to maintain in that position. Now, obviously, for those regarding my content that were in the Discord, because there's a forum to ask me questions, I have a chat in the Discord where I answer questions every single day. A lot of you guys got answers on these specific altcoins, but obviously there's a contingent of the YouTube audience which either isn't subscribed or doesn't have the money to subscribe, and that's also okay. Unless you're in a community where you have someone to guide you, you can often end up lost and in this weird position of waiting for the person that initially spoke about a coin to verify or give you an update to make a change to your positioning. But the major problem with this is that it's a clear sign that you entered a position, and I did this many times, where you didn't have real conviction or a real trade thesis yourself. You didn't have your level set out before the trade. You didn't have your fundamental analysis set out the trade. You were just buying because someone else told you that they were bullish. Now, that's fine, but then just accept that you are basically going into a trade blind. If you want to have full autonomy over your own trades, you need to have your own conviction and you need to have your own thesis. So in the future, this is what I recommend. You can watch content creators. You can get alpha from someone else. You can have a friend tip you a coin. Just make sure before you buy that coin, you decide whether it aligns with your strategy. And if it does, make sure you have your own framework around actually managing that trade instead of relying on that other person. This goes for friends that show you coins, family, YouTubers, creators on Twitter, Discords, anything. At the end of the day, it's your decision making. You need to take responsibility for that. And the way to do it is to strictly analyze each trade before you take it, irrespective of who gives it to you. I get a lot of great information off Twitter. I get a lot of great information off friends in the space, right? But what I do is I'll scan that information and I'll make sure whether it aligns with me. Whenever I haven't done that, I've often done badly from a trade unless I've gotten completely lucky. Whenever I have done that, even if the trade's gone badly, I've at least had autonomy to actually make my own decisions around exiting that trade. Point number 9, this is kind of controversial, but I think it makes a lot of sense. Don't plan on holding any altcoin long term. Now, in a way, altcoin investing is kind of a myth. Because investing in a traditional sense, like, Bitcoin for the stock market, it can be like a 5 to 10 year trade. But investing into an altcoin for 5 to 10 years is very risky, right? So I think the best thing to do is have your mental framework's base case. I'm just trading this altcoin. And then best case, you just keep moving your stop up and if the coin just keeps going up over 3 years, then it ends up becoming a long-term hold, but within the parameters of your trade. So I'm open for my altcoins to become long-term holds. I'm open for my coins to become 10-year holds, right? If that's the case, it means they just keep going up, and that's great. That's absolutely amazing. However, as I mentioned, your base case should be that you're just trading that altcoin versus the USD pair. So whenever you buy an altcoin, basically all you're doing is you're trading it versus the US dollar. Fundamentally, that's what you're doing. Unless you're taking profits into Bitcoin, then you're trading it against the BTC pair. So I think when you go in with this framework of, okay, I'm trading it, even if it's a 3-month trade, a 6-month trade, a 1-year trade, just having that mindset of framing it as a trade versus an investment means that you're almost by nature forced to have technical parameters. Whether that's, just the levels or percentages that you'll TP or or percentages that you'll invalidate a trade. So I think the power in labeling it a trade is it kind of shifts the mindset where you need actual levels versus an investment where it's very easy to be lazy. If you're investing in a coin, it's easy for that coin to go down 90%, like, oh no, I'm just investing. I'm a long-term investor. Nothing to worry about. I'm investing long-term. And that's kind of like it's almost a bad excuse for bad risk management. Whereas when you go in with, okay, I'm trading this alt, yes, it can end up becoming a longer term hold, but it's a nice base case framework to have, in my opinion. And then the 10th lesson is don't use leverage for risk taking. So leverage is a powerful tool when you use it for risk mitigation, but when you use it to take on risk, it becomes a very detrimental tool at times. Now, I know this because I only had 2 sleepless nights this cycle, only 2. Both those sleepless nights was when I had leverage positions open, very big leverage positions open. There were some nights where I had, like a 500K leverage position, which was oscillating like 200K every hour. And that's kind of a scary place to be, especially in illiquid altcoins. And they cause me a lot of stress. Whenever I've been in spot, I've been a lot less stressed because the most a coin's going to go down in a day is like 20 to 30%, right? The most your leverage position can go down in a day is 100%. You getting liquidated. So the 2 sleepless nights I had, both magically coincided with the 2 nights I had a lot of leverage on. So I learned don't use leverage for risk taking. Just either going with bigger spot, or if you're using leverage, use it to reduce risk. So going with smaller size and use leverage as a way to maximize your capital efficiency if you're locked up in other positions. That's very valid. So I'm never going to hate on anyone for using leverage, because at times I do use leverage, and at times I'll even talk about, leverage trades in the Discord. But the reason for that is we're actually reducing risk on our trades, freeing up more capital to be deployed into spot positions or, to make money for us elsewhere. So at certain times in the market, leverage obviously becomes a great tool, but it's not to take on risk. It's never to take on risk. It's never for you to be like, oh, I only have 100K, but I can get $1 million worth of exposure. Oh, let me just take on more risk. It should always be like, no, I have 100K, but actually I'm going to use that 90K for something else, and then I'm going to use 10K on a 10X to get 100K worth of exposure. That's slightly better. Or you can even be more advanced and do delta neutral strategies where you short one coin and long another coin, and that's where leverage becomes really handy. You can do pair trades. I'm going to long Bitcoin, short these alts. I'm going to short these alts, I'm going to long Bitcoin to hedge against my spot portfolio. Hedging against a spot portfolio is a very different proposition to just using leverage flippantly to take on more risk. So that is my lesson number 10. Hope you enjoyed this video. Those are my 10 biggest lessons this cycle. Got very candid and honest today, but I've really been doing a lot of reflecting, and I wanted to share this video with you because I think it can help a lot of you out. Next time, do whatever you need to do. Save this video, bookmark this video, come back and watch it the next time the market's pumping, because I think it's always going to be a helpful video. Even in 5 years' time, these are just really a lot of them emotional principles, which for any market are going to be applicable, right? So even myself, I'm going to go back. I'll leave the thread in the description because that's probably an easier way to save it. And this thread has all of the points, but obviously the video format today allowed me to go even deeper into these points and give you a little bit more nuance. So I'm going to be coming back to these next time the market is pumping. If you want to start implementing a lot of this stuff now, though, you can. You know, learning the concepts here, learning how to take profits properly, learning how to set invalidations, learning how to not be complacent. Obviously, we're teaching a lot of that in Mars High Club, but there's also a lot of free, educational content online. If that's something that you want to do and spend time on, now's obviously a great period to continue to learn and upskill. I'll see you in the next video. Have a lovely rest of your day. Peace out.